ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Hi, everyone. And it is Wednesday, the 24th of November, and it is episode 425 of the Currency Call presented by Forex Trading Asia. Welcome to all the LCMS Traders Club members as well. We've got a few in now. Okay, it looked like it was going to be a bit of a quieter session, but it's good to see people coming in. And if you are watching this call a little bit later on the YouTube channel that we have, welcome as well. And just a quick introduction as well to the currency call. So we do this call every Monday to Friday at 11 a.m. GMT +8. And the currencies we analyze are as follows. So on Monday, we do the Aussie and Kiwi. Tuesday, the Euro. Wednesday, the Pound. Thursday, we do Yen and Gold. And then on Friday, we do CAD and crypto, specifically Ethereum and Bitcoin. And in this currency call, we will go over the market economic updates, the key support and resistance levels, and we'll also discuss breaking news events and of course, much, much more on the panel here as well. And this currency call will be very beneficial to both the long-term investors and also the short-term traders. And here we will discuss what could move prices. We'll go through possible trade ideas and we'll discuss the stop loss placements for risk. And we'll also go into detail about the potential take profits too. Finally, an important point to make clear is that this is a disclaimer. So any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades. Now, we did have the RBNZ interest rate decision a little bit earlier today, about 2 hours ago. And we've got Gimme here, I think, Gimme More Pips. That's a nice nickname, actually. I agree, definitely give me more pips. And he'll discuss the RBNZ rate decision and what it means as well for the Kiwi too. So over to you now, Gimme.
Alrighty. What do we have from the RBNZ? Okay, MPC continues to reduce monetary stimulus. As expected, okay, the RBNZ, they hike interest rate, but okay, I was saying I was expecting them to hike by 0.5%, but they actually just carried out a 0.25% hike. So they raised the OCR, okay, from the previous 0.5 to the current 0.75%. Okay, so yeah, like I mentioned yesterday, if you guys are going to be seeing like a 0.25 hike from the central bank, then it is likely that there's going to be a disappointment. Okay, there's going to be a disappointment across the market. All right, we may be seeing Kiwi dollar weakening, which we are actually seeing right now. Okay, so should I just go through the chart, or okay, maybe I'll just show you guys the chart later. Let me just cover a couple more points because I think the press conference has just ended. Okay, Governor has just finished speaking. I still need some time to go through what he covered, so I probably may be filling you guys with more specific details tomorrow. Okay, but as of now, all right, we see that over here. Okay, fortunately, they actually say this. The committee noted that further removal of monetary policy stimulus is expected over time, given the medium-term outlook for inflation and employment. All right. So what this means is, the central bank is actually still looking at further rate hike in the near term, which is good. Okay, because what we don't want, okay, to hear is, they may carry out 1 or 2 rate hike, okay, 1 0.25 rate hike or 1 0.5 rate hike, only to tell us that they are not going to look at any more rate hike for the time being, okay, putting a pause to their interest rate hike. That may actually be so-called like a dovish hike kind of thing, okay? But right now, yeah, some may call this, the decision today to be a dovish hike. Personally, I feel that there's still chance for Kiwi dollar to come back up, okay? It's just that, 0.25, like I said, everyone expects a 0.25. Okay, if anything more than that is hopefully is something good. Okay, anything less than 0.25 is a strong disappointment. Okay, but yeah, 0.25 is what we get from the RBNZ. All right, so let me share my chart. Let me show you guys what I mean by wait, which is the one? I have too many charts with me. This is the one. Okay, so can you guys see my chart? Give me a thumbs up, Scott. Can you see my chart?
Yep.
Okay, cool. So
these charts the whole morning, so that's why his charts are all messed up right now.
sorry, I can't hear you.
I was messing up your charts all morning. That's why your charts are all over the place.
Oh yeah, thanks for that, by the way. Okay, anyway. So let me just draw a line, a quick one over here, plus 8 hours is 9. Okay, so as you guys can see, this is the hourly chart, all right? And the news was 2 hours ago, okay? So it's at this 0-100 candle over here, all right? You can see, once the candle opens, it's a direct, wow, it's a small one, okay? 13, 14 pips drop, okay? Instead of a, what do you call it? And a strengthening of the New Zealand dollar. Okay, so it's not always going to be the case that a rate hike translates to the strengthening of the corresponding currency. Okay, you must actually see what the market expectation is of the central bank. Right, in this case, the market is expecting the central bank to carry out a 0.25%, and it has already been priced in. Okay, way before this, right? So a 0.25 hike in interest rate, at most is going to create a neutral, a neutral move, okay, meaning stagnation. Or worse, it may actually be a disappointment because, it depends on how much expectation is there coming out from the market, okay, in terms of a 0.5% hike. But as of now, we see like from the decision up to now, it's like some 20 pips decline. Not too bad, okay, not too shabby, I would say. So personally, as of now, because I have yet gone through the policy statement, okay, in full, because I think they actually released some form of a projection, okay, which can play a huge role in price movement, okay, in the short run, all right? And also, what was being asked during the press conference, okay, and how the governor all actually answered to the journalists. So I will go through those items, all right, and I'll probably update you guys again tomorrow, okay? So as of now, yeah, pretty much get a dovish hike from the RBNZ, okay? So, okay, before I hand it back to Scott, I would like to bring your attention to what's going to happen tomorrow at 0300, okay? The FOMC, US FOMC will be releasing their most recent minutes, okay, for the monetary policy meeting, okay. So will it cause any movement? Maybe a small one, okay. Unlikely going to be a all over the place kind of thing, okay. Why is that the case? Because we know that the market has already received what they want from the Fed, which is the start of QE tapering, okay? So, with QE tapering starting, has already started, okay? With QE tapering already started, I would say there's nothing much more, okay, major to expect coming from the central bank, okay? We are not going to look at interest rate, at least for the next 6 to 8 months, okay? Because the earliest rate hike, that the market is pricing in, okay, is probably like mid-2022, which is around June 2022, all right? So at the moment, what we can expect from the central bank in the upcoming couple of meetings is whether the central bank will be adjusting the rates of tapering, okay? Meaning right now they are actually carrying out a $15 billion per month of tapering, okay? So will they increase to 20, 25 or 30, or will they actually slow down to 10, maybe 5, or maybe put a pause to it, okay? That's what we want to know. And we won't know, okay, until the next meeting, until the actual meeting itself, all right? But from the minutes, okay, we may be able to know the details of the criteria, okay, the criteria that has to be met, has to be fulfilled in order for the consideration of a faster pace tapering to take place, okay? Which is why this meeting minutes that will be released tomorrow at 300 hours GMT plus 8 will be crucial. Okay, will be crucial in terms of the details, all right? But in terms of price movements, unlikely is going to be, unlikely is going to change the hawkishness of the US dollar for the time being, okay? So yeah, just pay attention to, this what do you call it, release of the minutes, because although not much movement is going to be, can be expected, okay? If your trade stop losses are like narrow, probably like some 20-30 pips, it may be hit by a widening of spread during that period of time, or by a sudden spike up and then come back down or something like that, right? Vice versa. So yeah, just pay attention, because if you guys are having long-term trades, then yeah, you guys are probably more safe, when you have like some 80 or 90 to 100 pips of stop loss, okay? Unlikely the FOMC minutes is going to move 100 pips, okay? So any details that they'll be providing in the minutes, I'll go through it, and then tomorrow I'll update you guys again tomorrow, okay? So with that, any questions other than my hairstyle?
I'll jump in here and also add that our common approach, or our usual approach to the FOMC meeting minutes or press conference or any data release is that because it happens at 2 a.m. or 3 a.m. in the morning, best thing to do is actually, if you have a trade running, probably close it out, because yes, you might catch a good profit potential, but you also might end up waking up to a loss on a trade as well. So, if you're in a trade, you're making money, close it out for profit, secure that. If you are losing money, then, you might even want to close out for a small loss rather than hold it on and hope. We don't want to be trading with hope. We want to be actually knowing what we're doing through the whole process as well. With that,
all right, so who's going to hand it back to Scott, you or me?
We'll both hand it back to Scott now.
Okay, we'll both hand it back to Scott.
Thank you, Jindicator, and give me more pips as well. So we are trying, Claire, with the nicknames Jin and I. So I've changed it, Shermanator. I'm the much better version of Shermanator as well, just to declare, if anyone's seen that movie. But enough of that, because I feel like I'm going to go off on a tangent here, and we'll get into the US dollar chart now. So what I've done is, some people might not do this a lot, but I've gone on the weekly time frame just to get a bit of an idea now of really some upcoming resistance, just to sort of, plan out the approach here and what is incoming. And I do have 97.75. There has been some resistance, and this was a while ago. We've seen back in the 14th or mid-June last year. And we have broken out of 96, and we're currently at over 96.50 as well. So if I go down to the daily time frame, you can see how now that daily candle there is quite neutral though. But the thing was, so that's fair enough, considering there wasn't really a lot of news that came out last night. In fact, today is really jam-packed with news as well. And we do have that live call tonight as well from 8 o'clock GMT plus 8. So that would probably be the call to jump on as well. Obviously, every currency call is worth jumping on, but that could be quite active as well. So I had Imran message me earlier about the Kiwi as well, and it's a little challenging. For people in this time zone as well, if you do get up at a normal time and you're looking to trade straight away, it's sometimes it's really not worth pursuing things straight away. And that just means try and do something else. Don't jump into trades, especially with the Kiwi situation. It can be just honestly quite frustrating as well. So be cautious with that, especially with the lead up in the news that's coming in. And I'll just go to the calendar now, and I'll just go through what is happening today, and also what happened yesterday as well, just with the calendar, thanks to Forex Trading Asia here. So as you can see, we'll go down. Monday was very quiet. We've got yesterday, and I'll just focus on the US news. We did have manufacturing PMIs, slight beat on expectations. We had the service PMIs. So this is preliminary, still November, still obviously playing out. 57, so slightly down, but again, very elevated as well. And then a little bit later, early this morning, we had President Biden speaking, but Gimmy and I were talking about it before we went to air, and really the appointment of Jerome Powell again for the Federal Reserve chair was really seen as quite favorable for markets, which just means that he's a little bit cooler, calm, collected compared to Barnyard, who's been seen as definitely more hawkish as well, which just means that interest rates would be looking to come higher with her in place instead of Jay Powell. So later today, guys, we've obviously gone through the RBNZ stuff, and then we've got for the US, so starting at 9:30 tonight, we've got the core durable goods orders that are coming out, expected 0.5 in line with last month as well. We've got GDP then at the same time, slight increase here for quarter three, 2.2%. And then we've got the GDP price index, 5.7%. So, and really, this is very feasible to see the figures come in as expected. And that's only going to help that US dollar strength as well. And then we've got the core PC price index. Again, an increase is expected month on month for the October read at 0.4. It's always interesting to see the consumer expectations and sentiment, and we've got new home sales and then PC price index. So make sure you hang around, because what can happen is that in the lead up to these events, we can see some movement already on the US dollar. We've seen that before with the NFP. There was a lot of movement before the news release higher. So that's worth paying attention to. And then we've got the FOMC meeting minutes, but it's going to be a bit weird because we do have the Thanksgiving Day as well, but it's technically, the afternoon, the day before. So just be wary of that. And we could see some volatility later into the end of the US session. And then that is that for the news. Now, back to the chart. So I was mentioning yesterday about, and I had this line here, to the 96.20s, we did see a bit of a test on that. And I saw that there was a little bit of activity in the chat over in the US session last night. And it was a bit of a breather period, though, for the US dollar. We're actually moving up to test recent highs as well. So we could already see, and I probably will stay on the sidelines until the European session starts later today, just to see what happens if we break into the 96.60s and then ... really, and we could just hold stable there. But that just means that there's some opportunities with some trend continuations that are around. I had a look at the Aussie dollar. That's nearly 72 flat now as well. And we've got the euro that we mentioned, and we do have the pound also, and there's a bit of news there as well. So Jin will go over the pound pairs, guys, as well as there is some news to discuss as well on that too. So I didn't go into the pound. I didn't do a gimme where I discussed too much, but I think there's enough left for Jin. But over to you now, Jindicator.
All right, thanks for that. Well, so short and sharp, pound's gonna go down. Scotty's done all the work already. Okay, now, actually, while Scott was just talking about the dollar index, I'm looking at it, actually trying to move higher. So it's actually quite interesting at 96.50. I think that we might see something. I'm actually looking forward to it pushing higher. So that's high on my list at this point. But again, coming back to the news, what could push the pound dollar in either direction? Here, looking at the news, the only thing, there's not a lot of news happening for the pound at this point. What we had yesterday was the PMI numbers. As we expected, it has turned up. Actually, it surprised us a little bit. It has turned up better than expected. Same with the Eurozone numbers as well. But it hasn't moved prices too much because of how the US dollar has been moving. They're strengthening the US dollar. The next thing to pay attention to for today, you can see that we don't have a lot of pound news apart from this CBI industrial trends orders, which I don't pay attention to. It looks like we're going from a 9 to a 13 at this level, but these don't usually move prices. The main thing is the US GDP number quarter on quarter was a 2%, expected a 2.2. we are anticipating that 2.2, maybe 2.3, or even a 2.5 at the possibility. But I think that it might be released at almost at the wrong time. Why is it a wrong time? Is that we have, as we all know, Thanksgiving coming up. So it is going to be quite unlikely, I think, that although it's a GDP number anticipating the big moves, with a major holiday up ahead on Thursday, and then also it being on Friday, then you have the whole weekend. That's pretty much 4 days out of it. Unlikely that traders or institutional traders are going to be entering big trades at this point based on that news alone. So I don't think we're going to see the usual big volatility derived from a GDP data release. Good news and bad news. Why I say that is because looking at the pound dollar here, it is sitting right at this 133.73 level or 133.65 level. Anticipating a stronger US dollar, we should be seeing it drop. We should be seeing it drop past this support level. Like nothing to do right now unless it drops past the support level. If it does bounce up, I wouldn't be looking to buy, because you can see that as it tries to move up from last week, as it tries to move up, it's very choppy, and then very quickly it comes back down again. So I'll urge the patience. I would say sit there, wait it out, let it break that 133.65 before you try and sell. Where could you sell it to? Looking at it on a daily time frame now, the next level we have might be at about, let me just check, okay, might be at about this 132.22 level. So at this 132.22, what it means is if you were to sell, you can sit out, wait a little bit, look to sell below 133.50. Look to sell below 133.50. You would have a 30 pips stop loss for a good 100 and almost 120 pip take profit level. You're looking at a 1:4 risk reward ratio towards the downside. I'll zoom it in a little bit so it's easier to see again. Look to sell below that 133.50, 30 pip stop loss, 120 pip take profit level, 1:4 risk reward ratio towards the downside. But this will be dependent on a good GDP number coming from the US, the volatility that we might be lacking because of Thanksgiving. I think this will be a trade that is possible, but probably not something that would happen today or tomorrow. I think that this might take a longer time, maybe well into next week before we see it hit that level. Again, bear in mind, I think I say this quite often, is that this 132.22 support level is something that was visited back in, when was it? Last year, December. So we're coming up to the 1-year anniversary on that. And you can see that the last time it hit this level, it spiked before returning back up towards the high points again. So this is a very low point, a 1-year low. If it does get to this point again, then bear in mind, we're going to see a lot of volatility. We might see it spike downwards and a quick retrace again. Don't look to hold on to your trades too long, or don't over expect any profit potentials at that level. With that said about the pound dollar, what could happen on the euro pound is that if the pound dollar does drop that significantly, we should see it push back up. We should see this push back up. But I'm a bit more dovish on the euro dollar. Last we spoke about this, saying that it was going to test higher before turning down. If that does move, then the euro pound is likely to sit in a bit of a consolidation before breaking lower. So I think it's an update from yesterday's analysis. You should be looking to sell at about a 8378. You would have a 50-60 pip take profit level. You would have a 50 pip stop loss as well. So a 1:1 risk reward ratio towards that 83.16 support level. But this would mean that you would have a bit more waiting period, about a 20-30 pip waiting move before you're looking to sell. So quite simple in terms of the pound dollar and the euro pound. I'm still ranking the euro dollar higher on my watch list as a good selling potential. With that, back to you, Scotty.
All right, thanks for that, Jin. I have shared the trade ideas as well, everyone. And just remember again we do put the video up with the timestamps if you don't get the live call. So just remember to watch through that, use the timestamps just to get an idea of the timing of the trades as well. And feel free to ask questions as well. If you do see something that we've talked about and you just want a reminder, and we do try and share the charts as reminders as well later into the day when the London session opens, just to sort of reiterate anything. And sometimes things can change as well in regards to the original trade ideas that we talk about. So make sure you keep up to date with the commentary as well. And I hope everyone's having a good week too. Make sure you do jump into the LCMS Traders Club as well. The link there is within the YouTube video itself. So visit the Jindal Thai website. We are taking on new members and it'd be great to see more join. And that's it, guys, for today. We've got a lot going on later in the session, so make sure you rest up as well. Don't overtrade beforehand, and hope to see everyone on the 8 p.m. call GMT +8 tonight with the live trading. Thanks, guys. Bye for now.